we will assess the precious metals and commodities markets. Let's begin. Assessment of agenda and markets. There are significant developments in the markets, as we mentioned. An important development is the BRICS Summit. As you know, Brazil, India, China, Russia, and South Africa constitute the BRICS group. However, at present, 23 countries have applied, and a brand new economic organization based on commodities is emerging worldwide. Additionally, energy-rich countries' consecutive requests to join indicate a potential shift in the duopolar world's future direction. This sheds light on how well these countries can or cannot cooperate with each other. The fact that Putin might not attend the summit this week, probably due to concerns of being arrested upon arrival, adds to the current atmosphere. And this will slightly accentuate the line between the two global poles. India and South Africa might be more influenced by the West, but their national interests will still incline them towards cooperation with these sides. However, due to their history of exploitation and governance by Western powers, they will always have a certain inclination in that direction. Therefore, India and South Africa might be more vulnerable. Beyond these countries, new participants will come and go. This is a separate point of interest, but we will carefully watch if there will be any news regarding a new precious metal-based monetary system this week. There will probably be some statements, but a complete overhaul of discussions is unlikely. Nonetheless, we will closely monitor such news as they can suddenly boost the precious metal market. Additionally, the Jackson Hole Symposium is taking place. There's anticipation of whether it will take a more accommodative or a stricter stance. The effects on the dollar will be monitored. They might still apply some measures they can, potentially exerting more pressure. However, fundamentally, the impact of previous interventions is fading, and considering the evolving landscape of global conflicts, precious metals and commodities seem inevitably poised for an upward trend again. In this context, the American manipulation in these areas might be nearing its final blow, and it could soon be priced aggressively, especially in China, given recent developments there. Amid these shifts, China's continuous accumulation of physical gold through its central bank, as seen in the last 9 months, has raised questions about its intentions and the role of gold in economic crises. As these dynamics unfold, a report from the investment firm Gokering and Rosenwag titled, "Golden Foresight, When Speculation Meets History," caught my attention. This report delves into the historical price movements of gold. It suggests that gold has been remarkably underpriced compared to historical benchmarks and asserts that such extreme undervaluation hasn't occurred even during times of excessive money printing. The report implies a potential explosion upward, with a target price of $32,000, or at least $14,000 based on comparisons with reserve expansion pricing, which suggests a significant rally potential. Looking back at historical rallies in 1932 and 1980, they correlate with 1.5 times the Fed's liquidity expansion, implying gold's potential to reach $32,000. However, despite this, the current price action still doesn't reflect the realities. In the short term, uncertainties persist. While the long-term potential might exist, it's important to consider the immediate future. Moving on to specific commodities. Gold. In the short term, $1,898 per ounce is a crucial level. The nearest trend-following level is around there. We observed a good bottom formation at $1,885, and after briefly touching that level, we rebounded to $1,898. Closing above $1,898 might establish a short-term support, and thereafter, targeting $1,908 to $2, the 200-day average, is probable. We will cautiously track gold's movements in stages this week. Until certain thresholds are met, the downside pressure might persist. A notable event is the Jackson Hole Symposium, where expectations revolve around the Fed's stance. While there could be some short-term market reactions, it's unlikely to be a substantial driver. The long-term global shifts will likely exert more significant influence. Silver. Silver experienced a rebound at $22.95, signaling an upward trend. However, substantial movement requires closing above $23.50 for a week. The critical level is at $25.70, where a breakout could trigger a substantial move. Gold-silver ratio. The gold-silver ratio has fluctuated and recently hit around $70, even going down to $80. Despite initial signs, the ratio returned to around 82 to 83. A daily close below 82.62 might signal a turnaround, suggesting a bullish sign for precious metals. The ratio's movements influence the overall precious metals market. Platinum. Platinum has turned upwards, touching $907, surpassing my trend-following level. This Monday, I will consider adding to platinum positions. My minimum medium to long-term target is $1,800, but let's wait for the movement to begin. The initial signal was a close above $907, indicating a potential for higher levels, such as $960 and $1,000. Wheat. Wheat's price dynamics are noteworthy. A signal emerged with a short-term upwards movement to $606, rebounding from lows around $585. The disruptions in Russia's wheat shipments are impacting the market. Despite potential price manipulation, a close below $606 or even $585 could extend the downtrend. As long as we remain above $606, we can expect an upward trajectory. Brent crude oil. Brent crude is under pressure due to global dynamics. BRICS countries and Saudi Arabia are cooperating to support oil prices against the backdrop of economic uncertainties. It's a complex landscape with various factors affecting prices. A daily close above $82.48 and a weekly close above $85.90 might provide an upward trajectory, but there's a balance between geopolitical tensions and economic realities influencing oil's direction. Natural gas. Natural gas is at a critical point, with a potential upward movement. The $3 level has been tested repeatedly. The trend line around $2.49 acts as support, and staying above it could signal a strong upward trend. A daily close above $2.65 could be a turning point. However, staying below $2.49 might lead to a longer consolidation or a dip towards $2, but it's essential to manage leveraged positions cautiously. These are indeed intriguing times for the commodity markets. Precious metals and commodities are heating up. The BRICS Summit and Jackson Hole Symposium will be crucial to watch. Geopolitical tensions have a significant influence on the commodity markets, and staying informed is essential. Wishing you all careful and profitable trading during these exciting days.